Hey everybody, it's Mike from Orderflows. I hope you had a good weekend. Today is Monday, September 19th, 2022. And today I'm going to be talking about point of controls, right? Point of control in the order flow is the price level in the bar with the most volume. It's simply derived by looking at the volume traded at the price on the bid and the offer, right? Every bar has a point of control. So all you're really doing is to calculate the point of control, right? Is just you're looking at the volume that was traded on the bid. So for example, 38.55 and a half, there was 449 on the bid, 526 on the offer, right? You add that up, 440, oops, calculator, 449 plus 526 gives you 975. It's the most volume at any price level in the bar. You can see over here it was just 83 contracts traded. Over here it was 166. So out of the entire bar, this was the price level with the most volume. And it's important to understand where the volume is trading in a bar. Now, generally, most of the time, if you've ever studied statistics, the normal distribution will tell you that the most volume is going to trade sort of in the middle of the bar, more or less, not necessarily the exact middle, but somewhere towards the middle. Now, this is where it gets interesting in the order flow is it doesn't always turn out that way, right? Volume doesn't always, the majority of the volume doesn't always appear in the middle of the bar. And where it gets kind of more interesting is some softwares will do it for you, but I don't think it's really necessary. You can actually put up POC 2 and POC 3. POC 2 would be the price level with the second most volume. POC would be the price level with the third most volume. So let's just take a look at this. We'll just make it a different color so it's not going to confuse us with the regular POC. Is there yellow on here? Make kind of a yellow one. Gold. Make that gold. Okay, so I'm just going to put up this. The normal POC will be the gray color box. The second POC will be the blue color box, and the third POC will be the gold color box, just so you can give you an idea of how volume sometimes just really gets distributed out in a bar, right? Normal way to think of it is, volume would be concentrated somewhere towards the middle of the bar. Ideally, in a perfect world, you have POC smack in the middle, second POC right above it, maybe the third POC right below it. But as we're going to see, when you start looking at the different POCs, where they appear in the bar, oftentimes it's distributed throughout. Maybe early in the bar, there was some heavy volume at the bottom. Then market started moving and put the volume again, towards the middle. Then finally, as the market started bar getting close to closing, the POCs at a different level. So you could see right on these normal distribution bars, if you will, point of control right here, second POC, third POC. Now cash opens up. Right now we're starting to get more volume, and you can see point of control, second point of control, third point of control. Okay, here they're all sort of grouped together, but here they're kind of spread out. Here's point of control kind of in the middle, second point of control above it, third point of control below it. All right, group together, group together, group together, kind of spread out a little bit, some spacing, group together, group together. Now there's a big gap between the point of control and the second point of control. Okay, so you can see how it's spread out, right? And oftentimes, okay, you're seeing some bars, some big gaps in between some of the point of controls. Generally speaking, volume tends to concentrate in a certain area in the bar. Why? Is because people are happy to sort of transact at these levels, right? For example, this red bar here, right, point of controls, all sort of grouped together, right? People are happy to transact here. The market is bid offered, it trades a tick or two above, comes back down, trades, at that point of control. So oftentimes when market starts moving, you're going to see big changes in the points of control from previous points of control. Now, that's just, again, that's, something for more advanced traders. I don't want you guys thinking you got to put up point of control 2 and point of control 3 on your chart. You don't really need them unless you're a point of control fanatic and you're really into it. But the first point of control, the main point of control, the one with the most volume is what's going to be used the most in your analysis. Right? Again, once you start getting into second point of controls, third point of controls, it's nice to look at, but unless you're more advanced in your order flow analysis, having more of them up there, because sometimes people think, I could put second and third point of control on my chart, I'm going to put it on there. But at the end of the day, it's kind of useless because you're not really using it, and it's just giving you oftentimes sort of conflicting signals. You think you're seeing something happening in the volume, and you're just putting more pressure on yourself to have to make decisions. I said, unless you're really focused on point of controls and you're going to concentrate on point of controls only, you can build a sort of a whole strategy around it. Okay, maybe you can start looking at them, but you need to do your research. But really what I want to talk about today is the point of controls and its relation to price in the bar. And I can't stress this enough, right? Markets rotate, okay? And it's important to understand is from one rotation, you often get a reversal into another rotation. So what I mean is, okay, so here's cash open, okay, 8:30, and market started going up, right? You're getting nice movements in the points of control. You get up here, you guys sort of got this swing high, okay, right in here. Point of control, sort of again in the middle of the bar. We're closing, on the other side of point of control, right? We're closing above the point of control, which is what you want to see on a market that's going up. Look at these bars here, okay? In general, as you're moving higher, right? Here, point of control, price is closing beyond point of control, beyond point of control, beyond point of control, right? Here's point of control, we're closing way up here. There's point of control, we're closing one tick above. Point of control is way down here, we're closing above. You do get one or two bars here where we're closing just below point of control, closing below point of control. Again, we're closing above point of control, above point of control, above point of control. That's what you like to see on a nice moving market, right? Is price moving away from volume, right? I mean, volume is going higher. Obviously, these points of controls are going higher. Price is also going higher, okay? And where it gets interesting is where you start to get up at swing highs. You got to start watching for bars like this, where we poke up, point of control is above where price closed, okay? To me, that's a sign of markets kind of getting a little bit weaker, okay? Then we close above point of control, close above point of control. This is a green bar actually here. We close above point of control. I just have another indicator printing a red signal on there. Then you get up here. Okay, what do you got? Well, you got 2 point of controls side by side. Price is closing below point of control. That's not a good sign. It's a sign of weakness, right? Then obviously we're closing right at the point of control. Red bar is obviously closing down below. Get the green bar, we close above point of control. Okay, fine, fair enough. Then red point of control start moving down. You get start to see that bit of a sell-off. Okay, come back up here, right? We're closing. Look on this move up. Price closes higher than the point of control. Price closes higher than the point of control. Price closes higher than the point of control. Now price closes below point of control. That's a sign of weakness. Again, market starts to sell off a little bit. It does, and then starts rallying again. You got a sign of weakness here again, right? Point of control is up here. We close below it. Okay, then we come right back, close above it, sort of close right on it, close through it. This is also a green can. You know what, let me take this, let me just make a change here real quick. Change this to 1. I just got something else running over those candles. That's why it looks red, but it's actually green. So you got this green candle, point of control way up here, closing way down here. It's not a good sign. The next bar, point of control, sort of in the middle. It's a red candle, so obviously we're closing down. And we close right near our low of the bar, but we're closing well below that point of control. So we're putting in higher volumes up here, but we're closing these bars below it. To me, that's a sign of weakness, right? And how you want to be trading it is you're going to trade in the direction, I hate to say trade in the direction of weakness, but it's weakness in the market going up, strength in the market going down. Think of it that way. Even though it's kind of misleading to say it's market weakness, but what you have is market weakness on the move up. That move is weakening. So far, you're not seeing strong strength to the downside. I mean, you're starting to see it in here as price moves away from the volume, but then when you start looking at the additional pieces of order flow, that's just the point of controls giving you a hint that there's weakness in the market. Now you're looking at the delta. Oh, I got negative delta. You start, follow what I was telling you last week. As you're going higher, you see delta is strong, then it gets weaker, then it gets negative. Okay, well, we're going up, but delta's getting weak. You sort of have this delta flip that I told you about last week, where it was very strong early, plus 621, and closed just at 77. So it went from positive 621 back down to 77, right? Again, that's another sign of weakness. You're seeing the signs of weakness the way price reacts to where point of control is. So you're seeing some signs of weakness up here. What's the trade? It trades to the downside, right? And you get a nice move basically from, the 85.5, 86 area down into, the 70s, 76, 77 in here. Okay, and then again, similar thing happens. Market's rallying here. Okay, we put in a rally, closing on the point of control, kind of a bearish point of control, but the market came right back on the next one. Again, it's not that you just see a bar like this where point of control is way up here, price is down here, you get short. No, you still got to look at the follow through in the order flow, right? It's not just, oh, here's my trade right here. No, watch what's happening in the order flow. Again, point of control in the middle, just below it, then closing right on the point of control, closing right on the point of control. Finally, we get all the way up here. We got this doji bar. Again, doji candles, I tend not to lean one way or the other on them as far as getting long or getting short. Then we just keep going higher, higher, higher. We're making these new highs of the day and start coming off. Again, rotating around. Again, I'm just looking at this from the green candles section. I could probably do another video on the red candles, but what you'd look for there. This one was very interesting. You got the point of control right up here near the top of the bar. Bar closed basically on it, one tick below it. Then obviously the next candle, point of control way down, giving you a nice potential short opportunity. But I just like to, when I'm looking at, potential swing highs like this, right? We just rallied up from, the 74 area all the way up into the 84 area. Point of control right up here, but we're not holding it, right? We're trading below that point of control. And then the next bar, point of control is lower, and we're closing, essentially on our low of that bar, right? That's a negative sign. Just, here, right? This is your swing high again from this move up. You have this swing high here, but we're above the point of control. Okay, so again, I wouldn't be thinking of potentially getting short. I mean, if I were to sort of write down some instructions for you, it'd be like at a swing high, close below the point of control, and then in the next bar, close down, start moving lower, and close below that point of control. Okay, so you can see how the difference of here and here is, right? We're above the point of control. To me, there's still a little bit more capacity for this move to keep going, whereas this one, not so much. Okay, so again, that's it from the green and red candle side. Maybe later or tomorrow I'll put one out, for the opposite side, what to look for. But you can sort of get the idea of what you should be looking for, with point of controls and where price closes relative to them. Okay, so thanks for watching this video, and be sure to like and subscribe to the channel. And again, put some comments in there. My plan is, once I start getting enough comments, I'm going to make a video replying to your comments. So thanks everybody, and have a great day.